Our community banks and credit unions play a unique and critical role in the market for financial services, and we must ensure that they can continue to do that in the years ahead. These small institutions clearly do not pose the same kinds of risks as the biggest banks, and our regulation and supervision of these institutions should reflect that. The good news is that Dodd-Frank does reflect that basic principle. It exempts community banks and credit unions from many of its rules, and for the others, it almost always gives regulators the discretion to tailor their approach based on the size and business model of the institution. So when members of Congress start talking about rolling back regulations in the name of community banks, I want to be sure that it's really about helping community banks and not about helping their much larger competitors. Now, so I want to start with this. Ms. Hunter, in your testimony, you note that the Fed defines community banking organizations as those with under $10 billion in assets. Is that right?
Yes, that's true.
Good. And Mr. Bland, I understand that the OCC's definition of community banks looks at a few factors in addition to asset size. But under the OCC's definition, what percentage of community banks have under $10 billion in assets?
Senator Warren, we have about 85% of our banks are less than $10 billion.
Okay, and about what percent are under $1 billion in assets?
Boy, that's a good test for me. We have 1,400 banks under $1 billion. We supervise a total of 1,600, so that's really in the higher 80s as well.
So that's going to be in the higher 80s.
Yeah.
So nearly all of the banks that you're supervising, community banks, are going to be under $1 billion,
that's
much
correct.
less under $10 billion. And finally, Ms. Eberly, I know that the FDIC also defines community banks by examining a few different factors in addition to size, but I have the same question for you. Under FDIC definition, what percentage of community banks are under about $10 billion?
Using our definition, 94% of the banks under 10 billion meet our definition. A couple over 10 billion meet it.
Okay, so the banks, you've got a few that are under 10 billion that do not meet the definition
That's
of community
correct,
banks.
6%.
But your community banks, the ones that do meet the definition, are nearly all concentrated under 100 billion. You said all but a few, I think.
Yes.
And how many under $1 billion? That is way under 10 billion?
That's 90% of institutions.
Okay. So thank you. So it sounds to me like the consensus from our federal regulators is that out of the several thousand community banks out there, nearly every single one has under $10 billion in assets, and most are under $1 billion in assets. There are a lot of bills out there that are being promoted as helping community banks, but I want to look just a little bit closer at who they will actually help. And here's an example. Under current law, banks with less than $10 billion in assets are completely exempted from the examination and reporting requirements of the Consumer Financial Protection Bureau. A bill introduced in the last Congress would have raised that exemption threshold from $10 billion to $50 billion. By raising that exemption threshold, would that bill benefit any of the 99% of community banks that are under $10 billion in assets? Anyone? No? Okay, I'll take that as a no. In fact, given that the banks between $10 billion and $50 billion in assets directly compete with the community banks in many communities, wouldn't a bill that raises the Consumer Financial Protection Bureau threshold to $50 billion actually hurt community banks by helping their competitors? Anyone? In other words, it just adds more competition against what we define as community banks. So I just think that 6 years ago, we need to focus on the fact that 6 years ago, we suffered through the worst financial crisis in generations, one that caused millions of families to lose their homes, their jobs, their retirement savings, and that forced taxpayers to bail out the biggest banks. We put in new rules to try to rein in the biggest financial institutions. It is important that our community banks and credit unions thrive. But rolling back important protections to help the bigger banks just puts community banks at a greater disadvantage. The big banks are going to keep using the small banks as cover for their special rollbacks. That's what they did before the crisis, and that's what they've been doing after the crisis. We shouldn't fall for that trick.